Is natural gas storage in the U.S. near capacity? Bloomberg is reporting the 400 salt caverns, depleted oil fields, and aquifers used to store fuel in this country is about to be reached for the first time. It says stockpiles may surpass the record 3.545 trillion cubic feet this fall, pointing to Energy Department estimates, and that for one, Gulf South Pipeline says that its fields in Louisiana and Mississippi are so full, customers will have to pay penalties for exceeding their limits. Well, will natural gas soon have no place to go? Will companies be able to sell their excess fuel? Here to answer that and more questions is Elliott Gue of the Energy Strategist. Good to see you, Elliott.
Good to be here.
So with natural gas about to reach capacity, you've told us in the past that that time is right around now, that it could happen, but that it's going to be very tough to tell. Are we seeing the signs that it's about to be reached?
I mean, absolutely. You're seeing, you've heard from several pipeline companies that are limiting how much gas their customers can put through the pipeline. You're hearing about other involuntary shut-ins where wells are being literally stopped producing because there's just nowhere to put the gas.
But it's sort of spot kinds of places that we're looking. I mean, is there any way to accurately tell exactly how much capacity is being used, how much is still available?
Well, the official estimate is about 3.9 trillion cubic feet is full capacity in the U.S., but it's never really been tested before. I mean, as you mentioned, the previous high was at 3.45 roughly. It looks like we're definitely going to surpass that. And then it's just a question of whether we're going to hit that full number, 3.9, or whether maybe they can squeeze a little bit more storage somewhere. But there's really going to be very rough between now and the end of injection season. You're going to see a lot of volatility in those natural gas futures simply because of that.
Heating season kicking in is not going to be much help.
Heating season kicking in after November, after the beginning of November, we should start to see demand really pick up as we head into heating season. And then you're going to see that the storage numbers start to come down again. You're going to see withdrawals from natural gas storage. And after that, and if you look at the futures curve right now, most of the volatility in the extreme price swings have been in the near-month futures contract. So the October contract, which expired today, and the November contract, which is now becoming the front-month contract. If you look out to, say, December or January, there hasn't been as much movement in natural gas futures. And in fact, most of the movement over the last month has been to the upside. And what that's indicating, there's a lot of nervousness about the near-term situation because of storage potentially filling completely up. As we move into next year and those withdrawals start to pull down gas again, traders are betting that the combination of a recovering economy coupled with production declines is going to bring those storage levels back to sort of a more normal level.
Tell me about the accuracy of the reports from producers about them reaching capacity. Are they reluctant to say, individually, I've run out of space, because that could hurt their competitive position?
There is some reluctance, and nobody's quite sure exactly because it has to do also with how much you can compress the natural gas in a particular storage facility. So nobody knows for sure.
So some could sort of double up and get more into their current aquifers.
Plus, you can compress the pipeline a little bit more. In other words, the gas can be a little higher compression there. So you sort of storing natural gas in the pipeline network as well. So that's why there's no exact estimate for what the full storage is.
But basically, we're talking about excess gas having to hit the market, and that's what's bringing prices down today. And for how long could that keep going on?
Well, really, I think it's going to be over as we start to move into heating season. As we start to move into heating season, we're going to see a natural increase in demand for natural gas that starts in early November and accelerates really all the way through the end of January. That's going to bring those storage levels back down. At the same time, we should start to get more data about exactly how much production has dropped off. We're beginning to see declines in production in the U.S. as a result of the decline in the rig count that's been going on over the last year.
But the rig count has been inching back up only slightly, but it is coming back, right?
Yeah, the rig count's been inching slightly up. If you look at the total U.S. rig count, most of the increases in rigs have really been on the oil side, not the natural gas side. Of course, oil storage or oil inventories have generally been coming down over the last several months. So there's not as much of there's no problem on the storage side there. But natural gas rigs, you really haven't seen, you've only seen them inch off their lows. And there are a few rigs going back to work, a number of reasons for that. Some of those rigs are going into these new shale plays where you have a lot of drillers looking out, trying to do some exploratory type drilling on those new shale plays. Some of them are the big producers saying, why should we cut back and curtail our production when we think that storage is going to reach full capacity anyway? We might as well try to sell some gas now and go ahead and fill up the storage and then sort of spread the pain around the entire industry, and that everybody's going to have an involuntary shut-in when we reach that full capacity level. I mean, the natural gas market essentially resets every November because no matter what the storage is at the beginning, that's when you start to see those drawdowns.
But the price has to sort of come back again. It has to go back above 5 or 6 for producers to pump enough to meet the demand. But that is once demand resumes.
Right. But I mean, if you look at the other thing, to look at the futures curve. If you look out to early next year, you're already seeing prices up. If you look at the next 12 months, average of the next 12 months of futures contracts, it's about 565. So if you look out a year from now, prices are back up in that $6 range. So a producer today is saying, they're not selling all their gas in the month of November. So yes, it's going to cause a short-term hit if those prices are very depressed in the front month. But they're also hedging their production, looking out, a year from now. So at those prices, it's much more attractive. So a company that's using the futures market to hedge their position, they're not really facing that really low price that you see on the spot market or in the near month futures. They're facing sort of an average price over the next 12 months. I mean, if you look at that on that basis, what we call the 12-month strip, we're actually trading near the highest highs we've seen in natural gas since February.
Which is around what?
Around 575.
Okay.
And that's, again, an average of the next 12 months. And that's really, I think, what people are starting to pay a little bit more attention to from a trading perspective. Yes, everybody knows that we're probably going to hit full storage capacity. Parts of the country, you could see natural gas prices really plummet because there's just going to be a glut of gas trying to be sort of pushed out onto the market immediately. But if you look out early next year, it looks a lot healthier, and that's one of the reasons why natural gas producing stocks have actually outperformed the commodity generally over the last several months.
And that will continue? This is the time for investors?
I do think so. I think we've probably seen the lows for natural gas for this year. It probably happened at the end of August, early September. And again, looking forward, I think you're going to start to see those longer-term, farther out contracts start to inch higher again as well. Because people are going to start to again be sort of forecasting that we're going to see this decline in production as a result of that drop-off in the rig count. At the same time, and this is very important, the recovery in the U.S. economy. We've seen those industrial production figures sort of accelerate again. We're seeing some signs that the manufacturing economy in the States is expanding again, and that has really been the main source of decline in demand year over year. It's that industrial demand for natural gas. If that comes back at the same time that production is falling, it's going to take time before producers can really ramp back up their activity. It takes some time to drill these wells and put more gas into production. If those two things cross, declining production and a resurgence in demand, that's when you could really see upside in natural gas prices.
Okay, and that could very well happen.
I would suspect that you will see somewhat of an uptick in gas prices. The only question in my mind is whether we go back to sort of that $6 region, or if there's a real big resurgence in demand coupled with a higher than expected decline in production, you could see $8, $9 gas at some point next year.
A little perfect storm there for the gas prices.
Exactly.
Okay, Elliott Gue, thank you.
Thank you.